Give us your outlook on the Australian property market. Will there be correction outside your obvious handbrake you've been mentioning in terms of migration? If nothing changes in the next 6-12 months, do you see there being a slowdown? And if so, any areas in particular?
Yeah, so I think there'll definitely be a slowdown just because we've got obviously rising rates and it's getting pretty overvalued. So probably not in Melbourne just because it's done nothing for 5 years anyway. It doesn't really go anywhere. But yeah, and I wouldn't be surprised if we have a correction. And I hate saying this because I think all the land cycle people have been saying 2026, but I wouldn't actually be surprised if we actually get one in 2026. So I think Sydney's going to go through one right now. The momentum in the house price data with Cotality, et cetera, suggests that Sydney's going to probably have 5% price falls this year potentially. But I wouldn't be surprised if Brisbane and Adelaide maybe follow next year. They could rise still strongly this year, but maybe sometime next year they'll probably have a correction. And it'll purely be rates are going up. They've gotten very expensive. And at some point there'll have to be some sort of mean reversion. That's my view. Then again, anyone listening to this, don't go, I'm going to go out and follow Leaf's advice because I've sucked at picking the property market because it's actually very hard. Like it's hard to pick this stuff, right? So this is just my thinking. I just think Brisbane and Adelaide are very overvalued or getting expensive. So if they have more of a run up this year, and I think like CBA and KPMG forecast Brisbane in particular to have strong growth this year. By the end of this year, it's going to be getting into super, super overvalued territory. And at some point, there's going to be some sort of correction. That just makes me nervous. Whether or not it happens, I don't know. Perth probably depends more on the commodity cycle. So this war in the Middle East might actually help Perth in some ways because WA gets so much revenue from, the LNG prices increasing and I'm not sure what's going to do to iron ore, but you could actually get a terms of trade boom, which always is good for Perth. Like Perth is more of a boom bust market. And I think you're still in that boom and it can run for longer. But that being said, if we have this conversation in a year's time or whatever, 18 months or 2 years, whatever, I wouldn't be surprised if I'm then warning on Perth because we know Perth historically, if you go back to the 1970s, it is a boom bust market and tends to follow that commodity cycle. And you guys had a pretty steep correction from 2014 up to, I think it was 2014.
2014 to 2019.
Yeah, 2014, 2019. And now you're having the flip side of that, but you could go back to having another one of those. And I guarantee you next time, if you did have another 8-year boom, and I'll be probably close to 60 by that time, like a 8-year correction, I'll make sure I get in next time at the bottom end. Because it is one of those markets where you can make heaps of money on the upside. But then also if you buy at the very peak and then it has one of those commodity price corrections, whatever, you can also have downside, as you saw between 2014 and 2019. So, yeah, but I think Perth's got more to run just because, if anything, this war overseas and the shortages and all that sort of stuff, it's probably going to work in its favour.
Leif Van Onselen, thanks for joining the Folio Property Podcast.
Cheers. Thanks for having me.